You've heard of high net worth, but we're talking about high net purpose. We want to find out how entrepreneurs, global leaders in our network are allocating financial, human, and intellectual capital in pursuit of purpose. But more importantly, we want to understand the compromises, the paradoxes in their approaches, pitch decks, and philosophies. Tom Steyer, welcome to High Net Purpose.
Joe, thank you very much for having me.
And this is our first podcast on the shores of the United States of America in a pretty important year. And we're in San Francisco on what I think the Irish would call a soft day. But it's lovely to be here. Thank you for making the time. And after having a knee operation recently coming up, it's huge. You're unbreakable. So let's just jump straight in. Have you managed to articulate your purpose?
Well, I think I've always wanted to have a meaningful life. I think most people do. I think that somewhere around 18 or 20 years ago, together with my family, my wife and 4 kids, we came to the conclusion that if we could stop the deterioration of the natural world, the other things going on in the world in terms of advances on all different fronts, we're going to make this an amazing time for humans and other species to live on the planet Earth. But there was a real threat to the health and safety of people around the world from the deterioration of the natural world and specifically from climate. And I felt as if I can make a contribution towards a robust and effective response to that crisis, that will constitute a meaningful life, knowing that that's not the only problem that faces us, but that's kind of, it seemed to me like that was the thin end of the wedge.
Wow. And in your opinion, how far do you think we have gone in terms of damaging our...
Well, I think that, there's a lot of ways to answer that, but the easiest way is just numbers. And, I think in 2015 in Paris, the people joined for the UN conference decided that we shouldn't go through 1.5 degrees Celsius, which no one in the United States even knows what one single word of that means. So let's just pretend that it's meaningful. Yeah. And at worst, we shouldn't go through 2 degrees Celsius. The last 12 months through January of 2024 measured 1.52 degrees change Celsius. And it looks like the month that we're in, which we're in the last day of February of 2024, will be the hottest February ever. So when you ask how far have we gone, we have gone through the lower level of what we thought was unacceptable. We can see a fairly straightforward path to going through the second level of what is clearly unacceptable to everybody's opinion. And we have yet to see the kind of reduction in emissions that would put us on a path to, understanding where it's going to stop, when we're going to get to net zero. Having said which, I want to say this before you ask me any other questions, Joe, I want to make it clear that the technology and the business advances and our capability of changing our trajectory is immense and incredibly exciting and gives me a lot of optimism that we can, in fact, keep this to a manageable level.
Okay. Do you mind if we take a step back then? So before you became the legendary investor, any points from your youth that you feel were formative, crucible moments for your development?
So in terms of how I think about people and in terms about how I'm happy relating to people was really born in my experience playing sports, because I played sports every single season from first grade through the last semester of college, overwhelmingly on teams. Mm-hmm. And, that's where I made my friends. That's where I felt most comfortable relating to people. And part of being on a team with somebody is you have to understand you can't play their position and they can't play your position. Mm-hmm. So at some level, you have to be partners and you have to support each other, and teams are always competitive in their own ways. I'm not a Pollyannish person. I know it's not perfect, but that's what I understand, is that's how I like to relate to people. I like people to think of people as my equals And I like that, to have them think of me as their equal. And I think that together we can do much better than we could separately.
When you were 19 years of age, you were working on a cattle ranch, and I think you were quoted as saying when you finished that summer, you went back home to your dad and you were like, I think the economics from these ranches is actually flowing to the John Deere's and International Harvester, and you bought stock. Do you think you were just wired differently then, or it was something to do with your upbringing?
I think I'm wired differently. It's first of all, there are a couple of things about working on that cattle ranch. Incredibly fun. Really had a blast. Loved the people who worked there. I also noticed how poor the people who worked there were. The kids of the people who worked on that ranch got shoes one day a year, first day of school. That's it. Supposed to wear them all year long. But I definitely noticed how much of the money got sucked out of that system into machinery. And I think that was, for whatever, it's not my upbringing. No one in my family's like that. It's a quirk of fate that I'm that way. No one in my family thinks that way. They don't really respect people who think that way. It was a surprise to my father. It's not something that I really share. So it's not the way I was brought up. It is something that happened when the DNA were forming in the womb.
You're also commonly quoted saying that character is destiny.
I'm sure I stole that from somebody. I just don't know.
That's great. You should keep it. I think it's wonderful. But was that also from your youth, or was that from learned experience? From the cowboys of Wall Street.
I think the people on Wall Street would be lucky to think of themselves as cowboys. I think that I've always thought that it's much easier to do the right thing. Doing the wrong thing leads to incredible complication and pain. Mm-hmm. And that, keeping that simplicity is by far the best way, if you possibly can, that I can think of to get things done and to be happy and to be satisfied and to be effective.
So you're at General Atlantic, you went to Stanford, and then you went to Goldman's.
Well, actually, I went to Yale. I went to Morgan Stanley for 2 years as an M&A analyst. Then I went to Stanford Business School, and the summer in between was General Atlantic.
Okay.
And then afterwards, I worked for 2 years at Goldman Sachs in New York.
But during that period at General Atlantic, you decided that you wanted to be on the investment side more so than on the sell side.
I knew that before General Atlantic. That's why I was working at General Atlantic. I worked for 2 years in the M&A department, which is a financial advisory business for corporations, buying other corporations.
Yeah.
And I worked with some incredibly high quality people at Morgan Stanley working incredibly hard for starters, but also doing incredibly smart and really leading from a financial standpoint, that whole wave of mergers that came in at the beginning of the 1980s. Some incredibly smart, talented people. I didn't want to be on the advisory side. Mm-hmm. I felt like, okay, I don't want to be the person giving the advice about what to do, because there you're getting paid to get hired to give advice. Mm-hmm. I wanted to be the person who was making the decisions because I wanted to stand by my decisions.
Okay.
If you're giving advice and you can never really say that you were right or wrong, you just have to convince people that you're smart. When you're investing, it's kind of like there's some numbers that say, did you do a good job or not?
And at Goldman's, you were on the risk arb desk, which is, do you want to explain what that actually is?
Well, risk arbitrage is basically anything where you're investing over a period of time dependent on a single outcome for an event. So event-based investing is kind of a simple way to think about it. What the risk arbitrage group at Goldman Sachs was, which is a 5-person group, when I joined it, was doing all of the principal investing for all of Goldman Sachs within the context of that partnership. It was still a private partnership, hadn't gone public. So it was in the context of a highly levered, brokerage firm. So doing a good job there and being super careful and thoughtful was critical. And it was led by, when I joined it, Bob Rubin, who became the head of Goldman Sachs and the Secretary of the Treasury and had a very distinguished career. And not surprisingly, they put somebody who they really respected in charge of that group.
Wow. And I think one of the lessons you learned there was rule number 1, don't lose money, and rule number 2, don't forget rule number 1.
I believe that one I know who I have to attribute it to, which is Warren Buffett.
Okay, all right. Well, you then set up your own, as you say in America, your own shop. So, which was initially HFS before it became Farallon. Is that right?
Yes.
And the motivation to go it alone came from where?
Well, I think there were two things going on. I think Kat and I wanted to move west of the Mississippi, and I think we were determined to live back in that part of the country. And so when I opened up HFS, it was in San Francisco. I think also, for better or for worse, I think I learned at Goldman Sachs that I wanted to work for myself. And that, Goldman was, I think at that time, pretty much the most successful, preeminent Wall Street investment firm. So I don't think it was any aspersion on them. I just think it was pretty clear to me that I was not going to be the world's best at reporting to people. And
then Farallon became this investment juggernaut over the years. When you look back now, do you know what the secret sauce in its success was?
I think particularly in liquid investing, but in all investment verticals, people think that there's such a thing as a good business. There is not such a thing as a good business in terms of returns. Because if you're in a business that is getting very good returns and other people can see it, then it attracts money and that drives down the returns. Yeah. And so in effect, if there's something that is unfairly lucrative or unusually lucrative, unless there is some defensible mechanism around it, it gets to be a commodity over time. And so when I think about what we were doing at Farallon, we started 20 investment businesses within Farallon. Always something new, always trying to be, okay, what is the next thing that we can do that gets very good, safe returns? We have to understand the strategy. We have to think we're best in class. We have to think we have the best in class team. But I mean, there is no investment business that doesn't, if it outperforms, draw in a lot more capital and therefore draw down returns. And so it's really critical to be doing new things, but also to be building real defensible domain expertise and capability every year, so that if someone goes, I'm going to do what Joe does, the answer is, sure you are. If you put in 10 years, and by the time you've put in 10 years, he'll have put in another 10 years, and you'll be 10 years behind him. So you really have to think strategically, where are the places that we can go where we have defensible capability to do multiple transactions at good returns.
And this will be pertinent later on when we talk about Galvanize, but during that period, did you learn how to identify talented investors, or did you find strategies that you said, we need to be in that market, I need to find the right people to run them?
Both. I mean, there's no question, there's certain businesses. We were in film finance for several years. And that was a business which, if you'd said to me when I was at Goldman Sachs, you want to be in film finance, everyone knows that's a terrible business. You definitely don't want to be in film finance. It turns out there was a way for quite a period of time where you could do film finance with a very good expected return, very good downside, and with some real ups. But there were only less than a handful of teams in the world that can do it. And one of them knocked on our door. Mm. We looked for years to do a specific kind of arbitrage. I probably wanted to do it for at least 8 years. And in the 8th year, someone knocked on my door. But there were only a handful of people in the world who I would have answered the knock. So some businesses you can train people up below, but you need someone at the top of the business who really understands what they're doing, making strategic decisions.
So answering that knock, what is it that you're looking for in
track record?
Track record.
And then you have to do all the other things you have to do. Then you do, reference checks, looking at the number, looking to understand how they did it. There's a lot of difference. Numbers are nice and numbers are important, but numbers can say a lot of different things. You can get numbers a lot of different ways. And so understanding the real process, what is your real expertise? What is your differential capability? How do you look at this structurally so that you really can think of this as a consistent business? Those are real questions.
What about getting teams to gel together? What did you learn, or actually could the teams function independently given the nature of what they were doing?
getting people to gel together is partially a function of trying to choose people who you can trust, and partially having compensation schemes that give them incentive to do the right thing. And there's no perfect compensation scheme that I've ever seen. Every compensation scheme incents certain things and disincents certain things, if only by how much you include them. And so that if you're trying to get people to cooperate, that may make them less entrepreneurial. And if you're trying to get people to be, completely aggressive and, totally self-centered, that may break down their willingness to be good partners and cooperate with other people in the firm.
And the culture of investment management firms, it's changed dramatically in the last few decades, or?
Well, I don't really know, because I spent between 2012 and 2020 basically being a climate advocate. Yeah. So I'm not sure I'm the right person to ask. I would say from my experience, what we're doing at Galvanize today has a very different thrust in terms of thinking about how to hire people, and a very different thrust in terms of some of the ways of getting together, because the firm is really built on the idea of shared knowledge and shared domain expertise. But I think that's also a reflection of the different financial verticals that we're invested in. So I think, to some extent, asking people, setting up a compensation scheme for somebody, one of the questions you're asking is, what do you really want them to do? Mm-hmm. I think Warren Buffett, again, who I do think is an incredibly smart thinker about investment, he's basically, you have to figure out what people can control and then try and incent them to do the best possible job over the things they can control, and not pay them a lot of money or take away a lot of money based on things that they can't control. So, if you were to think about it on the most simplistic terms, the answer is you should pay people for alpha but not beta. That's a little abstruse. But it's just basically trying to incent people to do the right thing over the things they can control, and try to make it as specific and focused as possible.
That period where you created the Succession out of Farallon, because you were quite a young man when you sort of, compared particularly to other firms that you decided, I'm going to go do something else. Was there a moment where you decided that's what you wanted to do differently with the rest of your life, or?
Well, I would say, as I said, I think in 2006, Kat and I and our 4 kids went up to Alaska for vacation. And I had really wanted everybody to see the wildest part of North America, because I'd gone up in between working at Morgan Stanley for 2 years and going to Stanford Business School. I spent a couple of months being hired, if you can believe it, at the age of 24, to advise the state of Alaska on what to do with the excess tax revenues coming off the North Slope. Because they only had about 400,000 people, and they had billions of dollars pouring off, Arctic Ocean and the oil up there. And so they were like, what should we do with it? And so I spent a couple of months touring the state and thinking about that from a conceptual standpoint, but including touring the state. And I was like, this is just so amazing. And I tried to be out in the woods every single weekend. And I thought, wow, I wanted my family to get a chance to see what I'd seen. And we went up there together, and we were all looking around kind of like, wow, this is amazing. It's a gigantic icicle that's melting.
And that was in 2006, so almost 20 years ago.
Yeah. We were all pretty taken aback. And I think we came home and sat around the kitchen table and were like, wow, maybe we should do something about this. This seems pretty amazing.
So you started then thinking about, I want to go and do something different with my life, but I've got
Well, I didn't know what the problem was, Joe.
Okay.
You could see physically, obviously I'd read about climate. Everyone had read about climate, but there's a whole lot of difference between reading about it and see a gigantic mountain of snow that is completely gone. And so I felt like I honestly thought the first thing I think we all thought was, wow, it's technology. We need to have better technology here. And so we went around to some of the schools that we'd gone to say, can we help you do climate tech? Like, can we support climate tech at the schools that we'd gone to undergrad and grad, to say, you've got brilliant professors. You guys have turned out amazing research and companies. Can we help you do that in climate so that so we have we thought that was the response that was needed, and that was some of the response that was needed.
And your initial route was to look at political activism.
Well, we started funding research, which we funded really at basically 3 schools, I would say. And then in 2010, I got involved as a co-chair of a No on 23 campaign, which was basically saying it was 2010, we were at the back end of the recession. A couple of oil companies said, we think we should suspend all of the cap and trade and climate rules that California had passed in 2006 until the state is back on its feet, which they figured was going to be never the way they defined it. And everyone knew you don't win props against oil companies because they're too rich and too tough, too smart. And so a friend of mine suggested I could do it, and I did it with a Republican, an elderly and extremely distinguished Republican named George Shultz, who'd been Secretary of State, and a couple other cabinet positions going back to Richard Nixon, but including he was Reagan's Secretary of State. And we had a completely different strategy of how to win than had been used before. And we got 70% of the vote, with people thinking that we would get something like 30% of the vote. Mm-hmm. So we really turned the communications around climate on its head compared to what people had talked about before.
And the point that you went for the US presidency versus launching Galvanize, was that, what came first?
Presidency.
And after that, you were then, right, next up, I think we need to focus on the private sector more, or?
Well, the presidency was about climate.
Yeah.
I mean, if you go back and look at those debates, I would say in almost every single debate, the one thing that is completely different from everyone else on this stage and me is I will tell you climate is my number one issue. This is the issue that and I still believe this is the issue that we can achieve the most in, create the best future in, and also answer a big crisis.
What was movement capitalism?
The idea in movement capitalism is pretty simple, which is if you have a real problem, the way that we're going to solve that is by a concerted effort of capitalism, with that problem being the tailwind behind this effort. So when you think about climate tech or decarbonization or any of that stuff, I mean, I don't believe anything scales in the business world except profitable companies. You cannot raise enough money to solve global problems except with profitable companies. And you look around, people who've really moved the world for good or ill or neutral or whatever you want to say are big companies that make a lot of money.
You've said before that altruism doesn't scale.
If you look, and I feel bad about saying it because it sounds like I'm some kind of Grinch, but if you look at people's attempt to raise money for some of the best things in the whole world, and then contrast that with the amount of money that goes into for-profit vehicles, the for-profit vehicles honestly dwarf it. So that, and if you think about building organizations, like they can be for-profit, not for-profit, building organizations to take on global problems, you really need to hire a lot of people, you need to do a lot of work, you need to invest a lot of money, and it's very, very hard to do that outside of the capitalist system or the government system. Those two things really scale. Government really scales in multiple ways. Rules, taxes, really scales. And private enterprise really scales. If you look at, I look at some of my friends who are world-class scientists who do amazing research and who do it on millions of dollars a year, which they think of as a hell of a lot of money. And they are, in my mind, doing, phenomenal, unbelievable work. If they come up with a product and build a company around it, they can raise 100 times as much money as they're building in their lab, using their lab, literally.
So the move then to saying, look, the climate solutions can be a profitable enterprise, that there's actually an opportunity here. Was that another was that an aha moment, or that was always something that was in your mind, but then you started seeing?
I mean, I'm still the same kid who wanted to buy John Deere
Okay.
in 1976. It's like, I've always felt investing in a company that doesn't make money means losing your money. Yeah. And even if it's a great idea and a noble idea and it should have worked, it didn't. So from the very get-go, the only thing that's going to work for us is companies that are providing better goods and services at lower prices that disrupt the world and where people go, I have to have that. That changes the world. And so, if you look right now at renewables, if you look at the cost of wind and solar, well, it's about a fifth as much as fossil fuels. Guess what? That is absolutely determinative about where we're going. And I think, I haven't seen the numbers for 23, but in 22, 86% of the new electricity generation worldwide was renewable. Was that because people are nice and they were, trying to do the right thing? No, it's because the cost was 1/5 as much.
So you'd seen the levelized cost of energy had fallen dramatically, cost curves were moving, and the government
will continue to. Human beings are smart. Technology cost curves don't stop.
The ability to make money out of the sector, one of the criticisms sometimes is that a lot of it is hardware, not just software, and you need large capital investment. So particularly if you're going early into investments in this space, it's very risky, and you'll need to find larger capital partners later on in order to properly scale. Is that an unfair criticism?
That's absolutely true. I mean, I think that anybody who's an investor, I think one of the things that happened spending 27 years as a partner at Hellman & Friedman on the investment committee was trying to think really hard about, from an equity investment standpoint, what returns really good returns. And obviously you have to be very respectful of capital needs. Yeah, absolutely. And, capital is not always free. Capital is sometimes almost impossible to come by. So if you're going to invest in a company, you have to be aware what its likely capital needs are down the road, where they're likely to come from, how the people who are looking at it are likely to look, and you better realize that at some point you're probably going to have to raise money in a tough time. So you better have a couple of bucks in your pocket to go along with that ride.
And so when you launched Galvanize, you went first for launching a fund that was focused on earlier stage and growth companies in the sector. Mm-hmm. Did that surprise you in that, because of course when we think of like early stage stuff, we think of sort of, power laws and, most of them won't make any money, a few of them will. And it seems sort of contrary to your background in risk arb and, what we spoke about, the first and the second rules.
Well, it's funny because I'm on the investment committee, but I'm not one of the three people running that fund. And they all have, long and distinguished track records in venture and growth. Mm-hmm. So I felt as if actually I can be on the investment committee and they can be doing the work and making really making the investment recommendations. And I can be a experienced elder statesman. But I mean, the way that I really think about, I've loved the early stage stuff. And when you're in an investment business, just as I was saying about the film finance business, you've got to ask yourself, what is it you're betting on? What is the box you're looking at? How are these numbers supposed to work? And so when you're looking at early stage companies, you're looking at a completely different way of thinking than when you're looking at companies, that are 15 years old and have, tens of millions or hundreds of millions of dollars of cash flow. But it's still about assessing the future and trying to think about those things. And I find that honestly pretty comparable and extremely interesting and fun. I've really liked it, and I think it's been a wonderful experience.
So earlier on, you're talking about at Farallon where you saw the competition for capital into certain strategies impacting the potential return profile for them. When we think of climate, what's happening there? Because it does seem to be large flows of capitals into certain areas of the market, which distort them and then leave other parts of the market that are, which I guess is where your alpha is going to be.
Yeah, I think a big part of understanding if you're going to do what we did at Farallon, which we're definitely doing, we're a multi-strategy firm because we believe this ecosystem has information in every part of it that's relevant to every other part. So if you're going to be doing credit in climate, you're going to be learning things that are relevant to people who are doing venture in climate. If you're doing real estate in climate, you're going to be learning things about how buildings work, and then also dependent on people who understand what the new technologies are that are being developed right now that are going to be, relevant for the buildings that you own. So we really feel strongly that the multi-strategy effort is really important to building competitive domain expertise, that kind of ecosystem of knowledge is something that you have to structurally, intentionally set out to get.
So can you give us a flavor for some of the sectors or business models that you've seen that really get excited about?
Well, one of the things I think I don't know if my partners would agree with me on this. I think they would, but one of the things that when I think about how we're strategically going to respond to this climate crisis, I think that there's a widespread press perception that we're going to respond to this through gadgets. We're going to have EVs. We're going to have solar panels. We're going to have heat pumps. We're going to, all the different things we can do to do differently is what's going to make this happen. And they've been saying that for quite a while. And by the way, the emissions keep going up. And so when I think about it, that to me is a tactical response. Like, we have all these answers, so somehow it's going to work. I don't think that's true, and I think what we're seeing is not true. What I think is going to change the world is going to be measurement, verification, transparency, data. The old Michael Bloomberg, if you can't measure it, you can't manage it. If you don't know what your emissions are, how are you going to reduce your emissions? If everybody else doesn't know what your emissions are, why are you going to reduce your emissions? Mm-hmm. I think it's one of those things one of the issues in climate, of course, to get to net zero is that we need to not just decarbonize, but we need to sequester carbon. We need to suck CO2 out of the atmosphere and stick it back into the ground. Okay, we need to do that. Okay, and we need to pay people to do that because it's a big effort. And, we're talking about people think, and again, this is another number that doesn't mean anything, 10 gigatons a year at $100 a ton, that's $1 trillion business. Okay, so we're going to spend $1 trillion a year sucking carbon out of the air. Okay. If you can't measure it, how are you going to pay people? Like, if there's $1 trillion out there, everybody's going to be claiming they sequestered 1 million tons. I'm going to too. Hell. Yeah. I'd cut me down to 900 thou if you want. So I really believe that a key part of this is going to be developing the global information infrastructure so that people can manage this, can measure it, can account for it. And I think, and also so other people can see what you're doing. And I think that that's when we get those systems in place, we win.
So you're investing in those types of businesses?
Amongst others. But, I think if you think about the 21st century, maybe it's because I sit in Northern California, but you kind of look at the world and you kind of go, wow, what's really changed? Information. That's what's really changed. And you go like, think about all the revolutions that we're talking about. And it's kind of like information. So really, how are we going to develop and use information in this context is really, I think, something that people are dramatically underestimating.
In the earlier stage, growth stage type companies, can you give us another sector that you're particularly excited about?
Well, I think if you think through, there's 6 big sectors, which are electricity, transportation, built environment, manufacturing, agriculture, and sequestration. There's an awful lot of work going on in electricity. There's an awful lot of work going on in transportation. I think one of the really underestimated sectors in there is agriculture. And depending on how you measure it, somewhere, I think, between 20 and 30% of emissions. It's also a huge opportunity for sequestration. I mean, you're thinking about where are you going to sequester this stuff? Oh, in the ground. It's either the ground or the oceans. Those are your choices. So when we think about this and we think about, you said, what are you excited about? I think one of the places where we see a huge need with a much less robust response is really in food, ag, and oceans. And I think those are places which are, if you think about how businesses work, it's nice to have a product, but unless you have revenues, you don't have anything. And if you think about the 6 big verticals I gave you, all of them have very established, slow-moving, huge-sized companies as your customers, and that's tough. That's an issue because if you have, I'm going to get this wrong but directionally correct. If you do the median time for a Silicon Valley tech firm to adopt a new technology, it's 18 months. If you do it in the electric utility system, I have to be wrong, but it's definitely over 20 years.
Yeah. No.
Think of you being in a new business. You have the new product. This is the new product. You can't wait 20 years. And in climate, we definitely can't wait 20 years. But you think about the structure of that industry, there are a lot of impediments to fast movement, including a desire to be perfect 24/7, 365, a cost-plus industry. There's a whole bunch of reasons why, a heavily regulated industry, there are a lot of reasons why it's so slow, but in the context of getting things done, if you're in a business, you can go broke with the perfect product, waiting for them to buy something.
So how do you mitigate that? It seems like a big challenge in there.
It is a big challenge.
But I guess the government and the regulators are moving, and there's more pressure.
In every one of these, that's my point, is it's business. Yeah. Doing a nice thing that fails is not doing a nice thing. That's doing a failure. And so, I think one of the things that we feel really strongly, I said, we really feel like domain expertise, an ecosystem of knowledge, a network effect within all the people in your company is really critical. The other thing we absolutely believe is there's no green premium. There's no, you're saying I didn't think that kindness scaled. Yeah. We believe it's business. And therefore we believe this is a business where we have a huge tailwind, which is the need to solve a gigantic pressing problem. And there are a lot of people saying it's not a problem. The status quo doesn't need to change. I read them every day. I read them this morning very clearly, but I also know that February is going to be the hottest February ever. And that we're seeing the biggest forest fire in February in Texas history. So that it's not like we can see these climate numbers change and nothing happens in the real world. The costs are accelerating. And so we feel there's a huge tailwind here, but it's business and you have to treat it like business.
Public markets. So I know you've been talking, and actually, just to be clear, on your funds, you're looking to get market-beating returns. This isn't
Absolutely.
A concessionary return type
No,
strategy.
the opposite.
Can you have impact, or actually, no, there's just opportunity and there's risk mitigation through approaching public markets with the lens and the domain expertise that you have in the rest of the business?
One of the things that we're trying to do in building domain expertise and a real ecosystem of knowledge, including expertise in technology and policy, is to be able to say to CEOs and entrepreneurs, we're your best partner. You should accept our money, take us in as partners, because we're only focused on this one thing. We have real expertise. We're bringing it to the table. We're not just money. So when you think about the public markets, we want to say the exact same thing. We will never say, Joe, you SOB, we're running a slate against you. You don't know your business. We know your business. If you don't do what we say, we're going to throw you out. What we do want to say is we're shareholders in your company. You've said you want to do the right thing. We can help you do that faster. We can help you do that more profitably because we have real expertise in this. And so we can be a big help for you. And that we're basically a free partner, free consultant. That is the way that we can act in the public markets in a way that you actually have impact, but in a totally open and above board way and a totally supportive way that's completely consistent with the way that we want to interact with the C-suite in the private world, in the growth world.
Can you help us when we think about oil and gas and resources in our portfolios? So, there's big movement quite a while ago to exclude those out of our portfolios. But they still seem to be very important assets as part of the overall carbon transition, and moving some of these assets out of public hands into private actors may be the wrong thing to do. And on the other side, with the resource companies, we're going to need a lot of copper and rare earths, et cetera, to meet the goals that we have in terms of putting in solar and wind.
Look, I think if you start with the fossil fuel companies, they're making trillions of dollars of profit per year. And they are polluting for free. I mean, it's from the standpoint of a free market, they are not intentionally. I mean, people started using oil because it was the best way to heat things, best thing to power things. So there was no intentional malfeasance. But it turned out that there was a very substantial unintended consequence, which was heating up the planet. And we've known that kind of for 40 years, but we've really known it for 20 years. And, I think at this point, people always say, look, there's a transition, we need these companies, and that's absolutely true. But the question is, how long do we need these companies? And from my standpoint, do I expect people making trillions of dollars a year to come and say, oh, we feel so bad, we're going to give up that money? I do not expect that. That is not going to happen. And so, to me, this is business. We have to have something that's better and cheaper. And they're obviously fighting very hard to use the political system to support them, to support the status quo, and to keep doing the things that they want to do. And, they're very effective political actors and very aggressive political actors. But, if you look at the future, you have to ask yourself, when you started by saying, 1.5, 2.0, what does that mean? That means human suffering. So basically, at least for fossil fuel companies, you have people who are making trillions of dollars and not paying and socializing their costs. And they're socializing their costs in terms of money, but they're also socializing their costs in terms of pain. So if you see a third of Pakistan is, homeless because of floods, that's global warming, sorry. And so when I think about those companies, do I think that they absolutely have to exist in the short run? Yes, I know that. But do I think that the attempt to prolong this transition and to keep it going as long as possible and to have it basically be unending, I don't believe it can work, and I believe we have to win in the marketplace and beat them. That's what we're trying to do.
What about the resources companies?
Look, for a lot of the transition, there is going to have to be resources, and the way that we develop them and use them and reuse them is going to be critical. And to me, that's an information question. And I think, we cannot, I started by saying, you said, what are you trying to do? Can you articulate your purpose? And I was saying, I'd like to have a meaningful life, and I know that if we don't destroy the natural world, we're going to have an amazing life. Part of not destroying the natural world is getting to a place where we do a lot more reuse, a lot more recycling. And if you look at those numbers, and so, are we going to need stuff to build in order to? Yes, of course we are. But if we're not reusing that, if we're the throwaway society, if we're the plastic society, and, if you look at the projections for what we're going to do in terms of plastics, and you think about what that means in terms of health, birth defects, it's, those are things that honestly seem illogical. And so we're going to have to figure out different ways and be smart. And we are smart, and we can figure out different ways, and we're going to. So I think that people who are betting on the status quo, look, I think it's very hard to bet on the status quo because the status quo is taking us to a place that doesn't seem like it's healthy or supportable. And I think we're going to have better products, newer products and technology. And that's exactly what is happening. And I think people don't understand how fast it's happening and how good jobs the people do in those companies are doing. And, really, the human spirit is pretty friggin' amazing. and the human ingenuity is pretty freaking amazing. So, I'm going to, in this race between the deterioration of the natural world and the change to the way that we can live in a better way, I'm going to bet on human ingenuity.
Family wealth, do you think it's got a place to be able to invest differently in the climate solution than other institutional corporate actors?
I think one of the great things about climate wealth is it's your choice. You don't have to answer to somebody else. It's your life. You started by asking me, please articulate your purpose, and I tried to give you an answer.
Yeah.
I think every family has a right to do that. And so, from my point of view, I think not only the people in our family, but you get a choice of what you want to do while you're on this earth. And for a family, you don't have to answer to some anonymous person who claims to have hired you strictly for the bottom line. You can actually think about, what is the right thing to do. My argument is you don't have to give up return to invest in climate. I believe there's a huge tailwind to investing in climate, and that we're at a place where you can have your cake and eat it.
But are there areas that family wealth you think can go that other forms of capital can't go?
Well, give me an example, Joe.
Into your fund. But I know you've got institutional investors as well. But is there areas in terms of buying land, forestry? Because family wealth can typically be more patient, perhaps, than the fixed life of a fund. Most families come with a lot of human and intellectual capital within them from the businesses that they've built. So there's a sort of there's the potential to use that as well.
What I would say, and this may not be the answer you're looking for, but just off the bat, what I believe in investing is what they're doing with you. Is that if you're going to have a bunch of money, you should try and think about what your purpose is, and then you should try and figure out who's really good at that. And you should trust them. That's, in my experience, that's when people do well, is that you sit there and go like, oh, I'm interested in this. Joe's really good at stewarding that. So of course we're going to talk to him, and of course we're going to have opinions, and of course we're going to, maybe or maybe not have the final say. Doesn't matter. But we're going to basically figure out who the person is to trust, and trust him or her. And I think when I think about families, I think that's the right way to think about investing, is who are figure out your own values and where you want to go, and then figure out who you want to go with, and try and pick those people really carefully and not change them.
Have you come to any principles that you think work in how families can transition that wealth from one generation to the next?
It's so funny. Kat and I have asked that question a lot, and I think I don't think we've necessarily come up with a real answer. I think the thing that we've tried to focus on is to make sure that our kids are very motivated to have their own lives. And, we have 4 kids. I hope they all do. I believe they all do. I think they're all really hard workers, and I think we're more focused on that than anything else.
What keeps you young and vital?
There's an assumption in there.
But you are, you as we said earlier on, you just had some work done on your knee, but you're pushing yourself, out and coming here today, and you travel a lot, and you just got an abundance of energy. So there's something you're doing in your lifestyle or elsewhere that's keeping you.
I would say this: I really like to exercise. I still love to play sports. I really love my friends and family. I think that's really important. I am trying to have a meaningful life, so I'm very excited about the work that I get a chance to do. And I'm very excited about the people who I do it with. I mean, both the people at Galvanize and more broadly. I think that people who are, really pushing to try and have a meaningful impact are by and large really interesting people to be around. And I've met, I think that's a big part of what makes that whole thing work is, running into people, which I do all the time, who have worked, very effectively, very professionally, for a long period of time, with or without any recognition, because they think it's an important thing to do. And, I tend to see people in the climate space, in the, the decarb space, but I feel that way about teachers and nurses and firefighters and cops, and as well as all the people, yesterday I was talking to one of the world's great climate scientists, Johan Rockström, and it's kind of like Johan did this for years with no one knowing who he was. And I just so respect people who do that work, and it's a pleasure to know them, and oftentimes toiling incredibly effectively in obscurity, but God bless them. Isn't that the greatest?
And you've got a team in San Francisco, New York, and London now, but growing office in London. The people I've met have all been exceptional individuals that you've managed to attract onto the team.
There are a lot of people who want to work on the climate response. And I think that's one of the reasons that we're going to have success, is that I think we're attracting incredibly high quality, hardworking, and smart people. And if you do that over a period of time, you have results.
Successful. Our final question that we always ask.
Oh no.
What? It's okay. What would you say to a young Tom?
Well, first of all, a young Tom wouldn't listen to me. So there's a lot of things I could say. Look, my opinion in all this stuff is people have got to find their own path, and I'm very supportive. What I have said to people, young people for years, so not me in particular, but anybody, is, first of all, take yourself really seriously. You could have individual people as I was just saying, doing a job well over a long period of time is not only rewarding, it's incredibly impactful and important. And that you can be a kindergarten teacher, and I will absolutely respect everything about you. But I think it's really important to take yourself and your life's work seriously, and to work at it diligently under the understanding that it's important and you're important. And I think the other thing that's really true is everybody needs to be able to support themselves and their family, and I'm respectful of that. And I know that I'm super lucky in that standpoint. I know everybody has to, but everybody also has. I think we're much better off if we recognize our responsibilities to each other. And I think that our society needs that, and I think that we need it, and I think that even though it seems like it's a kind, giving thing to do, I think it's actually a selfish, smart thing to do. And I think it's really important for us as Americans right now to remember that, we really need to hang together, and we really need to support each other. And that's a way of thinking about the world that we have to reaccept and reignite and do.
What a note to finish the conversation on. Thank you again for taking the time. It's been a real privilege, and thank you for all you do.
Joe, thank you so much for having me.
Thank you for listening to today's episode of High Net Purpose. We've got monthly episodes airing throughout the year from all across the globe. Stay tuned for next time by subscribing and following us on LinkedIn, Instagram, and Twitter at High Net Purpose. All content on High Net Purpose is provided as general information only. It does not constitute any advice, recommendation, or representations, and is not intended to influence listeners or users into making any specific investments or any other decisions. Please be aware that guests and presenters on High Net Purpose may have investments in any of the topics or products being discussed. Their reviews and opinions are their own and should not be taken as endorsements or financial advice. Before making financial decisions, we strongly recommend seeking advice from a qualified financial professional. This podcast may not be copied, reproduced, further distributed, or published in whole or part.